Alphabet reported EPS of $9.10 against an estimate of $2.90, more than 3 times the estimate. The stock dropped nearly 7% anyway. We ran the 5-day FSR. The chart shows exactly when the earnings hit and what happened to the data structure. The beat was real insignificant, but 2 things spooked investors. First, Alphabet reported negative free cash flow for the first time since 2004. Second, they raised capital through an equity offering at the same time. Both signal that AI infrastructure spending is running ahead of cash generation. The EU also fined Google's $1 billion this week. JP Morgan lowered their price target from $460 to $420, but kept an overweight rating. The business fundamentals are strong. The spending story is what the market is pricing. 5 days of 30-minute interval data. FSR scored 91.6%. Rolling FSR at 97.5%. Price held steady between $345 and $355 for the entire week leading into earnings. Then look at the window 39 to 40. That's the earnings release. Price dropped from $345 to $317 in a matter of hours. The rolling FSR chart shows the same story. 99% all week, then a sharp collapse to 92 at the exact moment of the drop. Now look at the far right. Rolling FSR is already recovering back toward 99. The structure is stabilizing. This is what a fundamentals beat with a narrative miss looks like in the data. The earnings number was exceptional. 54% profit margin on a $445 billion in annual revenue, but the market is repricing what AI spending means for near-term cash flow. Yesterday, Tesla dropped 14% on weak profits. Today, Google dropped 7% on strong profits, but negative free cash flow. The theme connecting both is the same. The market is asking hard questions about where all the AI capital expenditure is going. We had the pre-earnings video up before this report. Link in the description. Full tool at predictability-api.com. Thanks for stopping by. We'll catch you in the next one.